Bitcoin shows new signs of decoupling from the stock market, but at the expense of the latest CPI inflation numbers. Here's your Altcoin Buzz news. Hi, I'm Natalie and welcome to Altcoin Buzz. Make sure that you are liked, subscribed, and notified for when we drop our latest content. Now, let's dive into today's headlines. The latest consumer price index inflation numbers are in, but it isn't what people have been hoping for. Though inflation is now at its lowest since February, the current rate of 8.2% is still not hitting the mark, since the goal was 8.1%, and every single percentage point counts. Volatility is only getting worse with this new inflation rate, with the stock market and crypto markets taking another hit. Bitcoin has been taking the biggest hit, showing signs of decoupling from the stock market as BTC tumbled to 18K much earlier than the stock market's new dip. And at this rate, the Federal Reserve's strategy of quantitative tightening isn't helping the global markets, with roughly $95 billion being taken out of the markets for months and will likely continue until the Fed start printing money again in 2024, when it's time to roll out quantitative easing instead. And even with Bitcoin hitting bumps in the road like today's CPI index, crypto adoption is still rising at incredible rates. You have to remember, bear markets are the perfect time to accumulate assets like cryptocurrencies. And in the US alone, it's reported that the number of Americans who have invested in crypto has jumped by 125% over the last 2 years, from 8% in summer of 2020 to 18% this summer. The feds are also doing their due diligence to warn Americans of the risks of crypto investing, saying that crypto is unlikely to replace fiat money and that banks should wait for full crypto regulation before fully diving into blockchain technology. But even that's not happening either. Ethereum is finally pulling off a huge post-merge milestone. The blockchain is officially deflationary. The new proof-of-stake burning mechanism has disposed of over 4,000 ETH tokens. Ethereum's first ever burning mechanism burns Ether tokens when transactions are verified. And even the rate of newly created ETH tokens has also dropped by 90%. Now this will make things interesting, as the number of Ethereum addresses holding at least one Ether token has reached a new all-time high of nearly 160,000 wallets. Think Ethereum's long-term value is changing for the better? Let me know in the comments. The Securities and Exchange Commission has another lawsuit on its hands, but this time it's the SEC that's in the hot seat. Crypto asset manager platform Grayscale is suing the SEC on the grounds of the SEC being biased on Bitcoin ETF offerings. Grayscale says that the SEC has an inconsistent stance on Bitcoin futures ETFs and spot market Bitcoin ETFs and who can offer them, and that if the SEC can approve Bitcoin futures ETFs, then it can also approve spot market ETFs as well. But Grayscale is really sticking its neck out on this lawsuit. On one hand, Grayscale says that there needs to be a clear jurisdiction over crypto between the SEC and CFTC, or Commodity Futures Trading Commission. But this lawsuit could put Grayscale's GBTC Bitcoin Trust at risk. But at the end of the day, somebody has to risk it for the biscuit and get some clarity on who's running the show on crypto and in which way. Algorand has been making some serious waves, including a huge new exchange listing. FTX has officially listed Algorand USDC, meaning that users will be able to trade, buy, and sell the USDC stablecoin on the Algorand blockchain. Now, on top of this, the Algorand Foundation is making a new upgrade to give the blockchain EVM capabilities. So if Algorand can operate like an Ethereum virtual machine, it means that users will have much wider access to Ethereum-based dApps. And this EVM capability also opens the door to new developers who can embrace Algorand as the building block for new dApps, making Algorand a more accessible and adaptable blockchain in the future. That's it for your Altcoin Buzz news update. Now, if you enjoyed this video and you need more insights for your crypto investing, then all you gotta do is smash the like, subscribe, and notification buttons so you can get all our latest content. And before you go, Here's some more updates and deep dives on our channel. As always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Thanks for watching, and we'll see you next time.